Welcome to another S&P 500 analysis. Today is October 21st, 2022. On the screen here, I show a tweet from this Wall Street guy named Nick. He's been utilized by the Fed in the last few months to transmit messages that the Fed want to send to the market. And today, almost a little bit over half an hour before the opening bell, he tweaked this out. And they basically is telling him to send to the market that the Fed might be looking on slowing down the hike after next month's 75 basis point hike. Look at the timing of this, 5:54, and this is right after the E-mini S&P 500 future hit a low for the Globex session or the overnight session. And then as soon as this tweet came out, it recovered all the overnight losses and more. And when the opening bell rang, the market just rallied up, and the S&P 500 up over 2.4% for the day. So go figure, is it coincident or is this a pivot that the market's been looking for from the Fed? So in this video, we're going to take a look at the market sentiment, the market internal, and also the price action of the indexes and see, is this the pivot that pushed the market up and that we have seen the bottom for this cycle? Or is this something else? Stay tuned. Look at this weekly chart of the S&P 500. As you can see, this week we had a range of 124 points, and it gained almost 5% for the week, or nearly 170 points. And it is still in this lower low, lower high price pattern, although it is, closing, above this low here and also above the pre-pandemic high. It is still underneath this 10-week and the 40-week moving average, and they both are declining. Let's take a look at the sentiment on this chart here. As you can see, the VIX for the last couple of weeks, it was above this 30 level, and on Friday it came back in and closed just underneath the 30 level at 29.69. And also the put call ratio, it was up above with the 1 level a couple days ago, and right now it came back into this 0.75 to 1, this zone here. So it's closed at 0.871. So the market participants are still risk off, not risk on, because it is inside of this zone between 0.7 and 1 for the put call ratio. And looking at this up down volume ratio numbers here, this chart here, you notice that on Monday, and this is the Monday rally here, we had a over 13 to 1 in favor of the up volume. But then you look at on Tuesday, another gap up rally, we only had a almost 5 to 1 in favor of the up volume. And today, Friday, we had a 2.4% gain for the S&P 500, and the up down volume ratio is only 4 to 1 in favor of the up volume. Now, also the other thing is looking at this advanced decline, the daily advanced decline. On Monday's rally, there were 2,119 more advancing issue than declining issue. And today, we only had 1,320 more advancing issue than declining issue. And on the new high and new low, look at today, the number of stocks that make new 52-week low in the New York Stock Exchange was 547. And only 40 stock make new 52-week high. And on Monday, we only had 120 stock make new 52-week low. So with almost 2.4% gain, and we have 547 stock make new 52-week low compared to the previous rally earlier in the week. Today's rally is kind of suspicious because the new high, new low is showing there were more stock making new 52-week low than the previous rally earlier in the week. Now here's the tell again. We're looking at this cumulative advanced decline line for the New York Stock Exchange. You notice here we basically have a lower high on the cumulative AD line, while we are showing a higher high close on the S&P 500. So we got a negative divergence, right? We still have this negative divergence that needed to get resolved right here, right? We got a lower low on the AD line, while we are getting higher low close on the S&P 500. This right here is telling us to be on the lookout for the S&P 500 to come down and put in a new closing low here. It's lower than this low. This close here is 3577.03, and that was on October the 12th. And here's the Nasdaq. The Nasdaq 100 today on Friday, it also closed with a gain of almost 2.4%, or 263 points or so. And also look at the up-down volume ratio. It was 4.46 to 1 in favor of the up volume. And on Monday, the rally actually had a little bit more stronger up-down volume ratio. It was 6.7 to 1 in favor of the up volume. And also the daily advance decline, there were 2,271 more advancing issue than declining issue on Monday, versus today, there were only 1,516 more advancing issue than declining issue. So once again, there's this little bit of a weaker performance today in today's rally compared on Mondays. And here for the Nasdaq, new high, new low. On Friday, there were 456 stock make new 52-week low, versus on Monday, there were only 207 stock make new 52-week low. So again, today's rally actually brought in more stock making new 52-week low than on Monday. And on this cumulative advanced decline for the Nasdaq market, and also we noticed that there is this lower high here on the AD line and a higher close on the Nasdaq 100. So once again, we are seeing a negative divergence between the index and the cumulative AD line. So although today's rally seems kind of impressive on the surface, 2.4% gain for the S&P 500, 750 points for the Dow Jones Industrial, and 260 points for the Nasdaq 100. But when we look at the internals, the advanced decline line telling us that there is a negative divergence, and also the daily advanced decline is not as strong as it was on the rally earlier in the week. So again, we have to pay attention to the new high, new low as well. So this rally here is very suspicious, and be cautious because the market participants are still risk off. Looking at this 10-year yield chart, as you can see that the yield went up to 4.33% and backed off after we got this leak from this Wall Street guy saying that the Fed might start considering on how to slow down the rate increase after next month's 75 basis point. So it pulled back from 4.33 to 4.21. Also, we saw the dollar came back down as well after it had a peak of 113.942 for the day. But we're still looking for the dollar to take out this high here, which is 114.778. And I'm basically looking at this area here up above this 117. We see the crude oil is still bouncing around near this $85 a barrel. So I would not be surprised to see the oil resume its climb in the coming week and bounce off of this zone here, which is this $85 level. So I'll be looking for this thing to break out of this trend here and move back above the 90 level and toward this 100. Silver appears to be holding this support here, this area here near this $18 level. So watch this $20 level here, this zone here, to see will silver come up to this zone and possibly make us another run at this 22 level. Gold also got a little bounce off this low here, somewhere around 1620. And right now it's back above this zone, this 1650 zone. So keep an eye on it to see would it be able to come up to this 1700 level in the coming week. Now let's just run through some of the relative strength chart on the 11th sector of the S&P 500. And as you can see on this technology relative strength chart here, the XLK is still relatively weak. And the healthcare is still quite strong, as you can see, it's coming up. Although the last couple of days show a little bit of a underperform relative to the S&P 500. And here's the discretionary, and as you can see from this chart here, that kind of tell you that the consumer is not really spending that much on the discretionary stuff in this high inflationary period. And the financials seems to be holding on. It's kind of flat. So it's been holding up. In the communication sector, look at how poorly it's been performing relative to the S&P 500. It's been coming down since the September of last year. And here's the industrial. The industrial seems to be holding up. And the consumer stable, well, what could we say, right? You have to buy the necessity, the essential. So it's just kind of flat here. And energy, we already know that the price of gasoline and price of energy been going up. And you can see from this relative strength chart here, the energy sector been outperforming the S&P 500. And here on the real estate, and you see that real estate really took a dive here in the last month or so. And here's the material. You see material took a dive back in June and it's kind of been flat right now, sitting in the last couple months. And here's utility. Utility is also pulling back in terms of relative performance to the S&P 500. Now let's go and take a look at the indexes, starting with S&P 500. And before I begin, just to remind everybody that next week we have some FANG stock scheduled for earning, and that's Apple, Amazon, Google, and Facebook or Meta. Okay, so be aware of that. And those stocks, depending on the forward statement or the quarter result, that could move the market. So with that said, let's take a look at the S&P 500. And here on the little bit of a bigger picture, you see that it bounced off the 50% retracement here. This is the pandemic low to the all-time high. So I basically drew a Fibonacci retracement between those 2 points. And here's the 50% retracement. A week ago, we got that bounce. That's the CPI report, I believe. And we got that bounce off of this 3505 area. So right now, we are basically sitting between this 38.2 and the 50% retracement zone. And this week, again, we saw the S&P 500 close above the upper range of the weekly expected move and close outside of this weekly expected move. So you see it closed at 3752.75. And next week, we have the upper range between 3,895 and 3,862.50. And the lower range of the weekly expected move is between 3642.90 and 3620. So again, we essentially are looking at a range of close to 220 points. The weekly range that's between this lower range and the upper range. And here for the scenario for the coming week, we see that the price might make a run up to this 38.2 or near this 38.15. So essentially trying to get at this 3800 level. And we probably will see a little bit of resistance and then push it back down. And I'm not certain that it will get up to this range here, the upper range, or get above the 3,900 level. Depends on some of the earnings from those FANG stock. If they are positive and some good guidance, then we could see this S&P 500 once again come up to this try to get at this 4,000 level here and target this 3,900, this upper range. Now, for the downside scenario, I'm looking at this thing to come back into this lower range and possibly retrace back down to the 50% level at 3505. Remember, we saw the internal, the cumulative AD line showing a negative divergence between that and the S&P 500. And I'm expecting that to get resolved sometime next week, and that we could see this low get tested here. And look at the Nasdaq 100, as you can see that I also have a Fibonacci retracement from the pandemic low to the all-time high. You see, a week ago, it basically came down to the 618 retracement level and got a nice bounce. And right now, it is sitting between the 50% and the 61.8% retracement zone. And we zoom this in a little bit closer and take a closer look. And as you can see, it has broken this trend line here, and we're basically looking for the possibility of maybe run up here and fill this gap here near the 11,500. And once again, similarly to the S&P 500, the Nasdaq also show a negative divergence with the cumulative AD line. So I do expect a little bit of a resolution that it will come back down to the 618. And that will come down below this 10,500 area. Then you come and test this low here. For the upside, essentially, like I said earlier, looking for this gap fill and possibly make a run up to this 50% retracement. And again, depending on those FANG stock reporting on their quarterly result. And looking at the Russell 2000, as you can see, the Russell 2000, again, will basically have this Fibonacci retracement set at these 2 points. And I've been sitting near this 50% retracement level, near this pre-pandemic high here. It came down to this 1648 a few times and got a nice bounce off of it, and sitting right now at this 1712 level. So let's go and zoom this in and take a closer look here at the price action. As you can see, right now, it appears to try to make a run up to this 1800 area, essentially come up to this high here. So we'll see what it be able to come up to this pivot high here, getting close to this 1800. There is a little gap here that waiting to get filled. So I'm not sure we're going to get that fill next week or not. But I'm also looking at the price to come back down and get underneath this pre-pandemic high and work itself back down to this 1650 area. And for the Dow Jones Transportation, you can see that the Dow Jones Transportation been bouncing off of this 50% retracement level. And right now there is a gap that just above this 13,000 area waiting to get filled. So right now the price is sitting above the 50%. And let's zoom this in, get a little bit of a closer look. So for the coming week, I'd be looking for the Dow Jones Transportation to see would it be able to get back above this 13,000 level, or would it dip back below this 50% retracement and come down and put in a lower low here underneath the 12,000 area. So that's the transportation, the Dow Jones Transportation. I doubted that it will come up and fill this gap next week, but hey, anything is possible, right? But the probability as I see it, I don't see it coming up to this gap next week. And here's why when we take a look at the Dow Jones Industrial. And for the Dow Jones Industrial, as you can see that it actually went below this pre-pandemic high and got a nice bounce just below this 29,000 and came up to this 31,000 level here. So if we take a closer look here and zoom in on the daily time frame here, you see that the Dow Jones Industrial actually closed at a sort of higher high at 31,082.56. Now notice if we go back and take a look at the transportation, see the transportation, it made a nice pivot high here on Tuesday, but on Friday it actually closed below that pivot high. On Tuesday it closed at 12,974.81, and on Friday it closed at 12,692.75. And you see on the Dow Jones Industrial, on Tuesday, the Dow Jones Industrial closed at 30,523.80. And on Friday, today, it closed at 31,082.56. So it actually closed at a higher high. So we basically have a little bit of a divergence between the transportation and the industrial. So for the coming week, what I see for the Dow Jones Industrial is a possibility of a pullback down to this 38.2 retracement level, essentially dip back below the 30,000 level and possibly make its way back down and back into this area here underneath the 29,000 level. Now, I did have a major move for this sort of a double bottom. So right now with the divergence between the transportation and the industrial, I'm not going to look at this anymore because this will not be valid. Now, doesn't mean that it could not come up here. Maybe it will come down and chop around before it come back up. So we'll see, but I'm not looking to use this major move as one form of projecting some potential target here. So right now, I'm basically just looking at the possibility of maybe it could get up to this zone here at the 32,000 level or come down and dip below the 29 or the 30,000 level and move back down for this 28,500 area. And looking at the New York Stock Exchange Composite Index here, you see that it dipped below the pre-pandemic high and bounced back and sitting right above it a little bit, pretty much in conjunction with that, right above the 38.2 retracement level near this 14,000 level. And if we zoom in, we see that there is this pivot high here around 14,324. So one of the possibilities was to watch the composite to see would it be able to come up and test this pivot high and get above this 14,400, or would it come back down and test this low once again somewhere below this 13,400 area. So did we get a Fed pivot on Friday from this guy Nick? Actually, looking at the internals, my conclusion is not a pivot, but maybe a narrative, for the administration or the Democrat to use for the midterm election. I talk about that the Fed is doing the thing and bringing inflation down and seeing some light at the end of the tunnel, and also we're seeing a little bit of a bounce from the stock market, yada, yada, yada. But if we look at the internals and also the price action, we know that was not the low. There's another low coming. And right now, it's just a matter of how high of this bear market rally are we going to see before we see a retracement back and make a new lower low. So we'll see. But right now, my bet is sometime next week, we probably will see some disappointed forward guidance or Q3 earning from either Apple, Facebook, Amazon, or Google. And that will put the reality back on the table to say, hey, this is just the beginning. More layoff from the tech sector as the holiday approaches. We're already hearing rumors, whisper about Intel going to announce their layoff plan next month. So beware, there are more coming, and that will probably send some shiver into the market, and that maybe will prompt the market to put in a low. But for now, I do not see a low have been made yet. Maybe we'll still get a little bit more of this dead cat bounce rally and go a little bit higher, but beware of the possibility of a lower low coming. So be sure to smash that thumbs up and help promote this video on YouTube. Thank you for watching and stay safe.